Welcome to the True Potential Performance Monitor for December. So today I'm going to look at what's been happening within stock markets, so look at stock market returns, and then analyse what have been the key themes within stock markets during November. Okay, so let's take a look at the returns right now. So as you can see, US equities have been very positive, and that's on the back of good sentiment from Donald Trump being elected as the new president of the United States. Looking at Japan, you can see we've seen quite positive returns in local currency, and that's on the back of a weakening Japanese yen. So that's a real benefit for Japanese exporters. Moving on to bonds, and this is a little bit more negative. We've seen quite negative returns during the month, and that's actually on the back of what's been very positive start to the year, but some of those returns are now unwinding. Lastly, looking at currency, what we've seen here is sterling starting to strengthen. But again, remember, we did have that big fall in sterling earlier in the summer. Okay, so let's move on. Let's have a look at what have been the key events. And if you remember last month, I discussed inflation and basically how we were moving into a rising inflationary environment. We've seen further confirmation of this as current inflation levels have picked up, but also, more importantly, prospective inflation levels for next year have also picked up as well. Okay, so let's have a look at the key themes. I think I couldn't stand in front of you without discussing what has been the main theme for December, which is the election of Donald Trump as the President of the United States. So Trump is seen as being very much pro-business. He wants to reduce both personal and corporate taxation as well. So what does that mean for investment? What does that mean for the market environment? What it means is that potentially we might see better growth. It means that we might see higher inflation, higher interest rates, and structurally higher bond yields. The extent to which this feeds into global bonds is something that we're monitoring very closely at the moment. Transitioning to higher bond yields won't be without some pain, but we've seen investors lowering bond duration across portfolios, thus helping to mitigate some of that interest rate sensitivity. Okay, so let's have a look at what sectors should do well with Donald Trump as the new president. And the first one is technology, so that benefits from cuts to corporation tax, and financials, which is helped by a steepening of the yield curve, which occurs when yields on long-dated bonds rise faster than those on short-dated bonds. Banks benefit because they borrow short-term and they lend long-term. Higher spending on infrastructure will feed directly into pro-cyclical areas, such as the construction sector, industrials, and some commodities as well. In general terms, this favours investors with a value bias. Okay, so let's think about investment right now. And in the current market environment, we're seeing a change to at what point we are within the market cycle. Indicators are pointing towards economies beginning to be close to full capacity and inflation is returning. It's vitally important that you understand what effect this will have on your investment and how to manage risk effectively. We're seeing a real divergence in return when looking at asset class performance, and even over the shorter term. To avoid being caught up in an underperforming asset class, it's important to diversify investment exposure. Here at True Potential, we offer our multi-manager, multi-asset True Potential portfolios. We know that in prior periods, diversification has reduced risk for investors. To be confident that this will hold true in the future, we've added a new higher level of diversification, which is diversification by manager style, into our True Potential portfolio investment proposition. Our objective is to manage volatility effectively over time and to encourage investors to take a longer term view when investing.